Hello, and thank you for tuning in. My name is Craig over at ourworldforex.org. And this is one of many videos we're going to be putting together about simple beginner trading technique. We see this basic technique lacking in almost every new trader that we work with and see. And it's something that really, I guarantee you, in any successful, consistent profit making trader, this is already second nature. And it can easily be second nature in you. It's something that is not complicated. It's less complicated than any strategy you'll try to learn. And it's something that I can almost guarantee every new trader I see is either lacking this skill or doesn't really know how it affects their trade. So what I'm talking about here is simple multiple time frame confirmation. Um, this is a perfect example. Today I think we had some news. We had news releases. Sometimes I think a couple of these news releases will put pressure on the Euro USD. We have some big swings here. It looks like some good opportunities to trade. So if you've got some kind of strategy, whatever strategy you've got, some crossover or whatever, I like to, I use price action and I'm a swing trader, so this could be a place where I would like to take some trades. But a lot of times what will happen is people will have their indicators set, those SMA, EMA crossovers with all the SMAs and all the EMAs, and they'll cross over, they'll get their signal, the candle will cross, and they'll jump the gun. And if you trade that style, you better have a lot of margin to lose, because if you don't check the time frames before you make your entry point, you're really setting yourself up for not really knowing where your money's going. If we look at this, we look like we get some big swings, and we do. But if we look before trading, we look at our other time frames, we see that the market is kind of starting to enter this consolidation. It's kind of starting to, we're kind of getting like a where we going kind of feel. Now look at this on the 1 hour, the same time periods. Now some of these swings aren't looking nearly as good to me as a trader. I'm kind of feeling like I don't want to trade here. And as a beginner trader, this is usually where people will get, they'll go on their lower time frames for whatever reason. Beginners love to trade low time frames, so they'll sit on their 15-minute, and maybe they'll get some kind of crossover. So now the price is crossed over their indicator, and they get the signal possibly to go long, or to go short for whatever reason. For whatever reason, they get the indication to make a trade, and then the market volatility, which they're completely unaware of, will spike the price, and all of a sudden one of these highs or lows is triggering a stop loss. And I mean, this happens so much, and this is something that can easily be avoided by simply checking your time frames. So if we look at this American session from 8 until, whatever current time, we can see that now, if let's zoom out again on the 2 hour, this is a very volatile time. This market is consolidating, and if you don't look at the other time frames, sometimes it's very easy to kind of get sucked into, look at these big swings. Look at, this is a 1 minute. I'd never trade the 1 minute, but people scalp the 1 minute all the time, and this is something that can help on the 1 minute too. If you're scalping the 1 minute, you can see when it's trending. You can see what the price is doing, and this is just watch the price action. This is watch price action and check your time frames, and you'll start, the more you do that, you start to get a better sense of the market, and you start to read the market. Regardless of what's moving it, who's moving it, where the money is going, you can kind of get a feel of what's going on. And I guarantee you this natural feel of the market will pay much higher dividends than any indicator strategy. And if you start doing this multiple time frame confirmation, say you want to trade the 15, okay, you're looking to trade on the 15, well, go out to the 1 hour, see how it looks. Okay, it's not looking as good. Okay, how are we feeling? The 2 hour, oh, we're getting some pretty low lows and some, what's going on, the low lows, the high high. the high, it's not a good place to trade. Then maybe let's go to the 3 hour, or let's go back even. Now look at it on the 3 hour. You got to think you're trying to trade internally inside one of these candles. Beginners will lose sight of all these things that inherently in successful traders and traders that do this every day, this is a thought process that's very basic. But in beginners, you'll see this lacking. That if you're trying to trade on the 15-minute, you're trading inside one of these candles. And when you have a market that's consolidating, you risk getting your stop loss triggered by a high that comes out of nowhere for some random reason. So I'd invite you to check out our website, ourworldforex.org. We talk a lot about this kind of thing. And stay tuned for our other videos. We're going to keep putting videos together like this. But this is something I really hope that you guys will start doing. If you don't do it, just check your time frames. They can really check your time frames, clear your chart out, and just watch the price action. Just have this up. Check the flow of the market. That's the key here, is the flow of the market. You're figuring out what the market is doing. And the best way to do that is to check your time frames. I thank you for tuning in. Thank you for everybody at Our World Forex. Thank you guys for watching. And I hope you guys have a good day, and I hope you have good luck trading. Thanks. Bye-bye.